All right, good evening, everyone. So before I start to share my screen, may you please type your in the chat box if let's say if you can hear my voice and if you can see my screen very clearly, please type one in the chat box. And if let's say if you cannot hear my voice or you cannot see my screen very clearly, then you just type number two. So I will be aware whether you have can receive my can see my screen now. Okay, never mind. So I will start my sharing today. So, yep, my name is Darren, which is the dealer, dual license dealer from Philip Capital. And yep, first of all, I just want to say thank you for all of you for joining for today's sessions, which is regarding on Rubble futures. And yeah, it will be a very insightful knowledge for you to learn, as this is a very brand new product that you have to learn in trading in Malaysia market. So this is about the SGS products. And then now it is also a new product that we are launching for you to trade. So before that, please allow me to share a bit on our introductions to affiliate capital. And before I do all the sharings, I just want to make a disclaimer here is all of the presentations today, it will be just a purely for educational purpose. So which means that we are not going to pursue you to try to buy or sell of any products. So let's say if you have any, want to seek for any advices, please come through to ask for any other professional dealers. For example, you can ask for dealers in Philly Capital to ask for any knowledge or any suggestions on how should you do for your financial plan. All right. So our Philip Capital, actually, we are incorporated on 7th October 1995, which is the wholly owned subsidiary of Philip Capital Holdings and Berhad. So actually, we have around 50 years in this industry already. And because our mother company actually is from Singapore, which is incorporated at 1975. So that's why we totally have 50 years in this industry. And maybe you have heard about this before. We formerly known as Philip Futures and Berhad because previously we only offer for futures and CFD services. But nowadays, we're also offering for securities products for all of you. So that's why we bring our name from Futures to Philip Capital. So we are trading participant of Busan Malaysia Derivative Berhad, participating organizations of Busan Malaysia Securities Berhad, and also the holder of Capital Market Service License. So which means that the way that we offer for all the products like futures, CFD, and securities is all in a very legal way, and which is under protections by the SC, Security Commissions. All right. So for our Philip office, actually, you can find totally we have 11 branches across in Malaysia, so including in East and West Malaysia. So you can see, for example, like other than Kuala Lumpur, our headquarters, you can also find us at Penang, like KD, Kota Damansara branch, and Malacca, JB, Keluang, Kuantan, even in East Malaysia like KK, Cebu, and Kuching. And yep, this is our global network, which means that we are not only just a local company, but we are also a global company because you can find our affiliate capital from any other countries, for example, like in China, Japan, even in some European countries, for example, like US, UK, even in Dubai, you can find our affiliate capital across the world. So we actually cover 15 countries for the coverage here. So means well, this is about the products that we are actually offering for you to trade. So for example, we are not only covered in Malaysia markets, and we are also offering in Singapore markets, Japan markets, Australia markets, Hong Kong markets, or even in US markets and London markets. And then, yep, maybe you have a questions like asking why to choose our Philip Capital as your broker. So I just want to be proud to mention that actually for last 2 years, we actually have won the Bursa Excellent Award of 2024, which is we are the champions of best retail derivatives trading participant. And we are also second runner-up of best overall derivatives trading participant. So in which that, if let's say if you want to have any informations like to trade with us, especially in futures products, you can always find our Philly Capital as your choice. So this is the one-stop solutions. Before you start trading, maybe you want to understand what kind of products that we are offering. So our products actually we are offering in futures, securities, so-called stocks, and also contract for different, which is CFD. So for futures, we have index futures. For example, like maybe you may heard about this is Kuala Lumpur Composite Index. So it will be about the index futures that we are offering. And also, let's say if S&P 500 or Nasdaq 100, you're also a kind of this category. And we are also offering agricultural futures, for example, like crude palm oil, soybean, and much more. And we are also offering in metal futures, like maybe you really love the products called gold. And we're also offering silver and copper. And we're also offering energy futures, which is crude oil, gasolines, and much more. And last but not least, we're also offering cryptocurrency futures like Bitcoin, Solana, and also Ethereum. But for stocks, we are not only covering in Malaysia stocks, we are also covering in US, Hong Kong, Singapore, and Australia shares. So which means that we actually offer 5 countries for you to trade in the stock market. While for contract for difference, which is CFD, we're also offering Bursa share CFD, NYSE share CFD, Nasdaq share CFD, and also US index CFD. All right. So as mentioned earlier, we are not only the first broker. We are not only the champions of winning the Bursa awards. We are also have a lot of. We are multi-asset brokers. That we offer wide array of products for you to trade. So, and also we offering the 24 hours broking as execution support. So which means that let's say if you are trading US market, especially at midnight, so you don't need to be worried about that there's nobody to assist you even at the midnight. You can always call our dealing desk to call for any services or any assistance. It will be someone who will always pick up the call and assist you on time. And we are also offering advisory services. And also we have shared our latest market news to all of our clients in email. And last but not least, we don't have any platform charges for you to trade of the futures product. And also we offering one kind of submissions, one services is called free one-to-one coaching. So let's say if you have any questions, then maybe you would like to learn something from us, you can always book a time with our dealer. So we can guide you, maybe for example, the introduction to futures, CFD or stock tradings, or even if you want to know about the product knowledge, or you want to know about the platform, how to use the platform, or you want to know about the charting system, like what kind of indicators that we are using for the charts, you can always book for the time slot that we can always, let's say if we are available, we are always welcome to make a meeting with you, even on online or face-to-face. And also we are offering the weekly market call for our clients. So let's say if you become our clients, let's say if you want to learn more about the market news and updates and also some technical analysis on time, every Monday actually we will have one sessions. Like for example, in Monday 11 a.m. in the morning sessions, we have one research from Billion Security Research. He will always shares about the updated news for you, and then he will let you know about this week what kind of products that you actually can look into it. And also at not at midnight, it's at evening, 8 p.m. We also have one technical analyst, and he will also guide you about some products, like what is the potential entry or asset level for you to trade for the certain products. Okay, so let's say if you are interested to join our upcoming seminars or webinars, you can always feel free to scan for this QR, or you can just take a picture for here, because we usually conduct seminar and webinars for free. So because our purpose actually we are just want to let you all learn more informations and learn more financial informations from us. So that's why we always conduct free seminar webinars. So if you're interested, please screenshot for this QR, and then you may be able to follow up for our upcoming seminars and webinars. Okay, so moving to the next slide. All right, so let's say if you are interested that if you would like to open account and trade with us, you may also screenshot and take for this QR code as well. Meaning that currently we can do every applications by using online as well. It will be very convenient to you. And then, yep. So let's say if you face any problems, our dealer will always on time will assist you when you open account. So let's say if you're interested, we wait for another 5 more seconds for you to take a screenshot from here. Okay, so now we move on to the next slide. So for our trading platform, actually, we are using Philip Nova for you to trade for futures products. So for our Nova platform, actually, we have over 90 technical indicators for you to trade, and we can buy and sell directly from the chart. And we also offering market depth trading tool, and you can trade multiple products, for example, like local and foreign products together in one platform. So you can get all the live market news inside. And one of the powerful functions that we are having right now is we have the Nova AI training assistance. So let's say if you want to learn more about the information, like you want to get some ideas, you can always ask our AI. Maybe they will generate some information for you. But of course, every information just for purely educational purpose. So which means that it's just for your references. All right. And let's say if you want to test out what is our platform and I want to know about the interface, please scan for this QR or take the screenshot as well, because you can scan for the demo account and try it out to see what is our platform look like. All right, so moving to the next slide. So just want to mention about one thing is actually we also have our chart actually is powered by TradingView. So which means that let's say if you are a TradingView user, actually you can also link our Nova with TradingView. So after you link together, you can also use TradingView to trade for our products as well. It will be linked together. But one of the thing is I want to mention about is our Nova is free platform. So let's say if you use our Nova to trade, you can also enjoy the TradingView chart and indicators as well. So this is one of our advantages that we are offering. All right. So there's one promotion that I want to share is about the BMD trade futures with Philip. So actually currently we have one promotion is for Bursa Malaysia products. So let's say if you are opening for futures account and trade for one BMD products, actually you can entitle for the 50 ringgit of the trading credit. And of course, if let's say if you want to gain for more information, you can scan for this information to understand more about it. Right, so you can scan for it and get the terms and conditions. So without further ado, I just want to skip for this page and I want to introduce for our the speaker to share about the SGX commodities, which is about SICOM rubber. So before I introduce Dr. Arif, let me introduce our first speaker, which is Miss Penny Pan. So she actually has extensive expertise in soft commodities, which is a particular focus on rubber and dairy markets. She also a director, a commodities specialist in SGX Group. So, yep, I don't drag about the time, so maybe I can let Miss Penny, maybe you can open your camera and try to test out your mic whether we can hear you. Then I will move to the next slide for you.
Yeah, thanks, Darren. Can you see me and hear me?
Yep, I can
Okay.
see and I hear you.
Okay, good,
So,
good. Okay, yeah, hello everyone. I'm Penny. I think first of all, a special thank you to Philip Capital for organizing this event and having me here. So before Dr. Arif dives into rubber, let me spend just a few minutes to briefly introduce SGX. Next slide, please.
okay.
Yeah, so SGX is Asia's most international multi-asset exchange. So apart from the traditional business of equities and fixed income, which is bond listings, we also have a broad range of derivatives products, as you can see the bubbles here, including FX, indices, equity derivatives, and commodities. Next slide, please. Yeah, so if we zoom into commodities, actually our entire suites can be broadly categorized into three pillars that under the different three colors here. So the first one on the top left, the dark blue color, is the virtual steel mill. So we listed a suite of commodities required for production of steel. So they include iron ore, coking coal, for which SGX is the leading exchange for the seaborne pricing. And to tap off our virtual steel mill concept, we actually completed the launch of rebar contract in October 2022. So the second pillar on the top right, on the bottom, actually the light blue part is freight. freight is a parameter to global trade flows. So we have dry LNG and containers contract that we are the largest clearinghouse of dry FFA with a market share of over 70%. So which is very synergistically to steel mill. And recently we have garnered a lot of interest in container contracts as well due to geopolitical events. So the third pillar on the top right side, the green one, actually is the virtual EV complex. So this is similar to the concept of virtual mill, where we have various products for EV constructions in place. So consistency of iron ore for engines, the petrochemicals for car interiors, the energy metals used to produce the batteries, and the natural rubbers for tire, which will be our focus for today. And lastly, at the very bottom, the green color, we also have a suite of dairy products on milk powders, butters, etc. under a collaboration with New Zealand Exchange. I think that's all I want to share a little bit more about SGX. So I think next one we will just hand over to Dr. Arif to talk more about the rubber. Yeah, thank you.
All right, thank you, Miss Penny, for the short introductions on SGS Group. All right, so okay, so for moving on, our next slide is, I'm going to introduce our speaker later, which is Dr. Arif. So he actually is an award-winning and result-driven futures broker representative with our affiliate capital, as well as a medical doctor. So he actually recognized by Bursa Malaysia Derivatives as a top futures broker representative for 3 consecutive years. So yep, I don't drag the session, so I will pass the floor to Dr. Arif. And yep, Dr. Arif, you can try to share your screen now.
Okay, 1 second. Okay, I need a little bit of help because I cannot share my screen.
Okay, a moment.
Aaron, can you help me? Can you make me the presenter?
Yes,
All
make you
right,
as
nice.
presenter now.
Okay, I got it. Okay, so can everyone see my slide? And is my voice clear? I think it should be clear, right? Okay, but
Yep.
everyone can see my slide, right? Okay, I can see a lot of thumbs up there. Okay, so Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and good evening to everyone. So before I start, I would like to thank Singapore Commodity Exchange, as well as Phillip Capital Malaysia for organizing our webinar tonight. Okay, and this evening. So, and this evening we'll be looking into the topic of trading opportunity in SGX SICOM rubber futures. Okay, so I would say it's a market that is often overlooked, and it's very close to us. Okay, just next to Malaysia, and yet plays a very important role in the global commodity space. Likewise, what we have FCPO in Malaysia, right, and how it plays in the global benchmarking of crude palm oil price globally. Singapore Exchange also has this one commodity contract that plays a global role, akin alike to crude palm oil. Okay, and when people think about futures trading, they usually would focus on equity indices like FKLI, the DJI Nasdaq index. Okay, and you also have the crude oils, the golds, and soybean oils, palm oil under Bursa Malaysia. But rubber is no different. It's just the same thing, but just a different commodity. And it's a real economy-driven commodity, and it's influenced by the global supply chains and demands, global supply and demand chains, and as well as the weather pattern, industrial demands, the geopolitical developments, and most importantly, it's particularly situated and a lot of it affected in Southeast Asia. Okay, so in this session, the objective is not to promote aggressive trading or complex strategies, but instead the goal is to help you understand why we want to be looking at rubber futures under Singapore Exchange, and where the trading opportunities come from, as well as how traders can approach this market in a structured and disciplined way. Okay, so whether you're new to commodities or already familiar with futures trading, I hope this session will give you a clearer perspective on how rubber futures can fit into your overall trading or hedging approach. Okay, so with that, let's begin by first understanding what makes Singapore exchange commodity exchange TSR 20 rubber futures unique. Okay, so but as usual, before we start the disclaimer part, okay, and this presentation is for educational and informational purposes only, and it does not constitute investment advice, a recommendation, or an offer to buy or sell any futures or derivatives contract. And trading futures and derivatives, as you all know, involves a lot of risk and may not be suitable for all investors and participants. The traders may lose more than their initial margin. So you should consider your financial objectives, your risk tolerance, as well as seek independent professional advice before you trade. Okay, so before we talk about trading opportunities, right, let's take a step back and understand the rubber market itself. Okay, so natural rubber, okay, actually comes from natural latex, and once it's processed, it mainly becomes two tradable products. Okay, and I mean, do you know what latex mean? Latex mean liquid or fluid. Like, you know, the picture that you can see here, right? Like the video of that you've been seeing in the social media or anywhere else, video of rubber tappers tapping on the rubber trees, and then you can see that white liquid flowing into a basket. That's what latex is. Okay, so this latex, okay, is processed into two tradable main products. Okay, one is the RSS, another one is the TSR. Okay, the RSS is the ribbed smoke sheets. It's a more traditional form of rubber. It's processed into thin sheets and then smoked and then air dried. And RS is these ribbed smoke sheets are still widely used, but from a trading perspective, it's less standardized. Okay. The second one, and more important for one for us today, is the TSR. Okay, technically specified rubber. So TSR is processed into standardized blocks. Okay, like the one that you see on the picture there. Okay, and it's processed into a standardized blocks with quality defined by ISO specifications. So you can see the standards that are being made for each block. Okay, and because of this standardization, TSR is much more easier to trade, clear, and settle into the futures market. Okay, especially because we're trading for the physical rubber, right? So, and then 75% of the global natural rubber production is TSR. Okay, which is why most rubber futures contract are based on TSR grades. Okay, not RSS. For example, TSR 20, the one that we'll be looking at. Okay, the one that we have on the picture is TSR 10. And why we have all the numbers after the TSR is it reflects the quality of the blocks, rubber blocks. Okay, and on the usage side, 75% of the global natural rubber, 70% of the rubber usage is on the general tires, okay, general tire production, which means demand, okay, so when you're talking about supply and demand of rubber, okay, demand is very closely linked to the automotive sector, okay, the transportation, as well as the recession as a global economic activity. So as traders, okay, I mean, once we understand the product that we're trading, how it's used, we will naturally understand what affects the price movement, because we're going to be looking at the supply and the demands. Okay, it's going to be much more easier for you to understand the price movement as well as the trading opportunities that will come later on. Okay, so this slide shows you the global rubber market in terms of supply versus demand. Okay, so on the supply side, which is the production side, you have the Southeast Asia, okay, dominating the production of world's natural rubber. So mainly Thailand, okay, Indo, and you have Malaysia about 3%. Okay, so that makes up about 57%. And you can see that the supply is very heavily concentrated in Southeast Asia. Okay, so meaning any weather issues like El Nino, La Nina, okay, policy changes, production disruption, at these places, okay, in Southeast Asia is gonna move the market fast, okay, gonna affect the price movement. And on the demand side, the consumption, okay, you can see that the China is the largest consumer, about 43%, and then followed by Southeast Asia as well as India, 10%. Okay, so it's mainly driven by the tire and the industrial productions. Okay, so let's say when China slows down or they ramp up the manufacturing of automotive, for example, the rubber prices are gonna react almost immediately. Okay, so for traders, this means that the rubber prices are very sensitive to, in terms of supply, you're going to be looking at the supply disruptions in Southeast Asia, in Thailand, in Indonesia, and as well as Malaysia. And changes, and in terms of demand, you're going to be looking at the changes in demand expectations, consumptions from China. Okay, so basically what's happening in Southeast Asia for supply and what's happening in China for demand. Okay, and when either side shifts, price will move, and that's where the opportunity is lah. Okay, so this is basically fundamental analysis, all the sentiments that is going to affect the price movement for rubber, the supply and demand. Okay, clear? And okay, so the role of Singapore Exchange in global rubber industry, I mean, it plays a very central role, especially it's being TSR 20, a rubber futures is recognized as the global pricing benchmark. Okay, so you can imagine, despite Singapore is not even in the chart where it says it has the highest production for rubber, even though it's not even in one of the biggest producer of rubber, but it still plays the global pricing benchmark. Similarly to what we have in Malaysia, FCPO, who makes who is the largest producer of crude palm oil? It's not Malaysia, okay? It's Indonesia. And in fact, it's more than 50%. And yet, the global pricing benchmark lies with Malaysia. So that's why the rubber futures that Singapore Exchange have is very important. Where it sits in the global commodity space is very important, because that's where the global pricing benchmark is. Okay, and then because there's many physical rubber players, physical rubber buyers and sellers are based in or operating out of Singapore. The rubber futures, Singapore Exchange rubber futures naturally becomes the meeting point between the physical and futures market. Okay, and this futures contract isn't just for trading, but it's also used as an alternative delivery channel where for the physical rubber industry. Okay, so this is to show you the rubber futures that they have in under Singapore Commodity Exchange. So you have the TSR 20 and also the RLS 3. Okay, so the one that we're going to be looking at is the TSR 20 because it's the benchmark contract as well as it has the highest liquidity. RSS 3 is not less actively traded, so we're going to be focusing on TSR 20 this evening. Okay. And then the trading methods, I mean, the electronic trading is the one that we are trading through the trading platforms. Okay, and then we don't, and then for the physicals, by the physical market participants, they will be using EFP, and then for the institutions, they're going to be using NLT because they're doing large trades. Okay, so let's look into TSR 20, which is the main highlight for us tonight. Okay, this is the contract specification. Okay. The first one is the ticker symbol. Okay, the ticker symbol is TF in TradingView. Okay, so in TradingView, if you want to find and if you want to see the chart for TSR 20 futures under Singapore Exchange, we have to search for TF2 exclamation mark. Now remember, if you want to look at FCPO, you're going to be looking at FCPO continuous contract. It's FCPO 1 exclamation mark, right? So rubber futures is a bit different, and we're going to be looking at into it later on. Okay, and for Philip Nova, you can go to SGX TSR 20 rubber futures, and if you're using CQG, You can straight away search ZFT. The contract size is 5 metric tons, and the minimum price fluctuation is 0.1 cents dollars per kg. So that's basically meaning 1 point or 1 tick or pip or bit is equivalent to 0.1. Okay, so if FCPO 1 point is 4,000 to 4,001, but for Singapore commodity TSR 20 futures is 1 to 1.1 is 1 point. Okay, so the tick value for each point is $5. Okay, so if you whether you use bit, pip, tick or point is still is the same thing. So I mean for stocks you would call 1 bit for each movement is 1 bit. Well, forex is 1 pip, so it's the same thing. Okay, so each tick is $5, and the full margin value for rubber futures is $671, equivalent to 2,716 ringgit. And it's probably much lower now because ringgit is strengthening, and I think it's I mean for the contracts that we have under Bursa Malaysia, it's much higher, right? And TSR 20 rubber futures is just 2,716. So that means you can also be looking into swing trading or position trading, not just intraday trading when you're trading rubber futures. The settlement basis is physical delivery, meaning you have the physical delivery of the rubber itself. Okay, and because of that, the Sharia status is Sharia compliant as per CGSI Sharia panels, which we're gonna be looking at the following slides. And the trading hours is longer. Okay, compared to FCPO. It starts from 7:55 a.m. until 6 p.m. And now they've just launched the night session or the T+1 session, which I'm going to be showing to you guys on the next slide. And the active month is second month. Okay, it's different to the other contracts, but for rubber futures it's second month. Okay, and I'll show you why second month later. So starting from Monday, I mean earlier this week, okay, now they're introducing an evening session for rubber futures starting from 6:15 p.m. until 11 p.m. So I would say that's a very decent and long market hours. I mean, as compared to 7:55 to 6 p.m., now they're extending even a lot more. And they only have like 50 minutes of session breaks between the T to T+1 session. Okay, so this is just to show you that the Singapore SICOM TSR 20 rubber futures contract is Sharia compliant. Why? Because it's not ribawi products. There is physical delivery, physical settlement. Okay, and it's operating under Singapore Exchange. Okay, so there's a lot of numbers, but the key takeaway from this slide is that the liquidity is growing. Okay, you can see that on last April 2025 last year, reached a monthly volume record of 450,000 lots. Okay, and on 7th of April 2024, it reached daily volume record of almost 50,000 contracts. So you can confirm that this is an active and tradable market, not just a very niche product. Okay, and then you can also see there is a strong participation from offshore players. About 94% of the volume coming from offshore participants. Okay, and the OI, okay, the OI meaning the open interest is 93%. So if the open interest is 93%, that means it's showing that the positions are being held. Okay, not just day traded, meaning the participants are not simply just intraday or scalping and then finish on the same day. So this basically indicates the institutional as well as the commercial involvement in the market. Okay, and then on the daily average volume, I would say it's very consistent. The DAV, okay, I mean what DAV is, it tells you how active the market on daily basis. Okay, the higher the DAV means better liquidity, you have tighter spreads, and also, as well as smoother execution for traders. Okay, so you can see that as well as the notional value of DAV exceeds more than $100 million per month. Okay, so I would say it's suitable for short-term trading as well as position trading. So all these numbers will tell you one thing. Okay, SICOM rubber TSR 20 rubber futures is liquid enough to trade, and the market depth is deep enough for you to manage the risk, and it's active enough to offer opportunities across different market conditions. Okay. And okay, so as for for the rubber futures, right, 80% of the volume is concentrated in the contract month 2 to 5, mainly on month of 2 to 3. Okay, so this part on the left you can see month 2 to 3 as 2 to 5. I would say 2 to 5 dominates the traded volume, and then the far dated contracts traded much less. Okay, and on the right, open interest mainly on the second month to third to fifth month lah, second and third month lah, showing where the market participants are actually holding positions. Okay, so if you want better liquidity, lower slippage, and more reliable price action, the sweet spot for trading TSR 20 rubber futures is on second month to third month. I would say more specifically to the second month. I will show you on the next slide. And the simple rule of thumb for you to remember to which contract to trade is trade where the volume is, trade where the liquidity is. Okay, because it's going to be changing from month to month, right? So make sure you pick the right contract. Okay, so this is to show you all the trading volume and open interest for all 12 contracts. Okay, and higher, okay, on this box, right, it shows the total volume as well as the open interest. Okay, so the higher open interest, meaning there's more participants, more traders, more buyers, more sellers, meaning you have better execution, better charts, most importantly. And can you see here? Wait, okay, so this is the second month. Okay, this is the second month and this is the third month. Okay, this is the first, second, third. So the contract that you want to be trading and you want to be doing your chart analysis is on the second month. Okay, that is also the reason why if you want to look at trading view, it's TF2. Okay, TF2 exclamation mark, not TF1 exclamation mark. Okay, because that's where the volume is, that's where the buyers and sellers are. So you don't want to be looking at month 3, month 4 or 5. I mean, if you want to look at month 3, I think it's still within that liquidity, but just don't look at the first or the fourth contract because that's where the volume start to fall off. Okay, next one. Okay, so Singapore Commodity Exchange TSR 20 futures contract is the global benchmark for natural rubber, and the contracts are denominated in USD. Okay, so whatever gains that you get as well as losses are gonna be in dollars. All right, and it's denominated and traded. Sorry, it's dominated and traded by real industry players, the producers, the tire makers, the processors, dealers, funds, and banks. Okay, I mean, most importantly, the I would say the trading hours plays an important role, especially for us when you compare to the futures that we have here. And we're grateful that the fact that they're extending the hours on TSR 20 futures contract actually. Okay, and okay, so enough all the specifications. We're going to be looking at the more fun things now. Okay, how long do I have now? About 20 or 15 minutes. Okay, so the price behavior and trading characteristics of TSR 20 rubber futures. So very briefly, I'm not going to go into this so in depth because it's going to take a lot of time. I will probably need about at least 1 hour to go through every price action, but let's go to the simple ones. Okay, these are very simple to understand and very simple to figure out. So make sure you pay attention and bring out your pen and paper. Okay. The basic price action that we're gonna be looking at on how to analyze rubber futures are the market structure, support and resistance, okay, the trend direction, candlestick behavior, and key levels over indicators. Okay, so we're going to be looking at it one by one. Okay, there are a few things that I skipped just to make it easier for you guys to understand. Okay, so the support and resistance. Support and resistance is very straightforward. Okay, so support is where the buying pressure comes and push the price up. So support is where buyer is more than sellers. Okay, resistance is where seller is more than buyers. Okay, when it reaches that certain key levels, okay, certain zones, the sellers are going to be pushing back the price down. Okay, it's going to reject. Okay, when it reaches the support, it rebounds. Okay, when there's enough buyer to break the selling zone, okay, where the supply is pushing, okay, the zone where supply is pushing or where the seller is concentrated at, once it breaks, it's going to produce a higher resistance. Okay, and the previous resistance is going to be the support. Okay, so that's what support and resistance are. Okay, it's very simple. It's where seller stronger than buyer or buyers are stronger than sellers. Okay, clear? Okay, so very quickly, okay, very briefly, we're going to be looking at into what support and resistance, what are the characteristics that define support and resistance zones, okay, and why it's called zone. Okay, because support and resistance are an area, not a price point, not a single price point, but it's a zone. Okay, and they get better with age, meaning every time it rebounds, okay, rebounds on the support. If it rebounds a lot of time, that means the support is strong. Okay, and the support or resistance are where they are the spots on the chart where the price rejects and rebounds repeatedly. Okay, and it can be the extreme highs or lows on the chart. Okay, like for example, the all-time high, the all-time lows, the previous monthly high, the previous monthly low, those are the support and resistance. Okay, and they rarely need to be modified, and if you cannot find the support and resistance using candlestick, switch it to line charts. Okay, and when you talk about support and resistance zones, okay, area or levels, they are also seen by the other traders. Okay, not just by you. Okay, is being seen by all the other traders as well. Okay, so the next one is the market structure. So we've already learned about support and resistance. Now we're going to be looking at market structure. What market structure is, it basically defines what's happening to the market when it goes like this, higher and higher. Okay, so every point here is called the higher high. Okay, the point where it falls back, okay, is what we call as, higher low. Okay, higher low. All right, so you have the higher highs and higher lows. Higher high, okay, for example, it was sideways before. This is the higher than the previous high. Okay, the lows here, okay, the pullbacks are the low higher than the previous low, which is this one. When it breaks another high, breaks the previous high, it becomes the higher high. When it and then the pullback is the higher low. Okay, and it goes on until it reverses. Okay, and when it reverses the previous, let's say this is the higher low, right? So when it reverses, it becomes the lower low. Okay, the low that is lower than the previous low. Okay, okay, let's make this like this and this. Okay, let's connect these two. Okay, hold on. Okay, so it's going to be like this and like this. Okay, you can see that the low here is lower than the previous low. Okay, the temporary rebound here is called lower high. Okay, and then lower low, lower than the previous low. Okay, so very simple: higher high, higher low, lower high, and lower low. Okay, okay, so higher high, HH and HL, and then okay, you have the LL and the LH. Okay, lower high and lower low, higher high and higher low. Okay, just that four. All right. Okay, next slide. So, and each high and lows are the resistance as well as the support. So if it breaks the support, that means it's gonna go higher percentage for it to go down. Okay. The candlestick, very quickly and very briefly, if you're looking at the bullish candlestick, the opening, it opens below, and when if it closes above, it's going to be green, or it depends on what kind of chart that you're using, whether you're using your black and white, or green and red, or blue or red. So if it opens below and closes above, it's going to be bullish. It's what we call as a bullish candle. Okay. And for bearish candle, the price open above and closes below. Okay, so you have the O, H, L, C. Opening high, low, and close. Okay, and the high is the part where how far price managed to reach within that time frame, and low is where how far price go on the lower side within that certain time frame. Okay, so OHLC. All right, we're gonna make a quick recap later so that you can to make sure you guys can follow. Okay, and then another one is the trend lines. Okay, when we have the higher high, high low, higher high, high low, higher high, high low, right? If you connect the higher highs and higher lows, they're gonna that is where you have the trend lines. Okay, this is what we call uptrend line. Okay, and when it reaches the trend line, you would expect, okay, you would expect there is a certain percentage that buyers are gonna come in and push the price again. Okay, and vice versa for downtrend, lower low to lower high, lower low to lower high, lower low to lower high, and then you pull the trend lines, and when it reaches the trend line, you would expect sellers to push back the buyers and for the price to go back down. Okay, and then the last one is the chart pattern. Chart pattern is a pause or consolidation in the existing trend, after which the original trend resumes, or a pattern that shows that a trend is reverse from the original trend. Okay, so you have two major categories. One is the reversal, another one is the continuation pattern. Reversal and continuation. And the major reversal patterns are the head and shoulders, okay, and then you also have the double and triple tops or bottoms, okay, and triangle, wedge, pennant, flag are the continuation. Okay, so for every reversal pattern that occurs, the neckline must break. Okay, these are patterns. It's not very technical. It's just about you recognizing the patterns that are on the chart. Okay, so you have the head and shoulder. Okay, can you see the head and shoulder? It's okay, hold on. This is the shoulder, this is the shoulder, this is the head. And the inverse head and shoulder, this is the shoulder, this is shoulder, this is the head. And if it breaks the neckline, okay, if it breaks the neckline, then we expect the price to go up. And similarly for head and shoulder, you expect the price to go down. And for double top, similarly as well, if it breaks the neckline, you expect it to go down. Okay, so this is the continuation chart pattern. Okay, this is a bilateral chart pattern where it depends on where it breaks. Okay, so it's very important for you to know where the neckline is, because the neckline is basically the support and the resistance. And if it breaks the resistance, we expect the price to go up. If it breaks the support, we expect the price to go down. Okay, so when you read a chart, you will be focusing on the structure. You want to know whether the price is making sideways or is it trending. Okay, so you want to be asking whether is it making higher high or lower low, is it trending up or trending down. Okay, the support and resistance, the levels, okay, where price has previously reacted, okay, and the trend, whether the market is trending or ranging, and then context, meaning we're going to be looking at all the price action before you trade. Okay, so let's look at the chart and how to apply the price actions. Okay, so you have a few things. Okay, let's make a quick recap. Number one is the support and resistance. Let's make it bigger. Resistance. Number two is market structure. High, 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 low, and low, 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 high. Okay, agree? S and R. Okay. Number three is the candlestick. Candlestick, you're going to be looking at the OHLC, opening, high, low, and close. Number four, trend lines. The trend lines goes together with the market structure. And number five, chart patterns. Reversal or continuation. Okay. Clear? I cannot see your chat, unfortunately, but I hope you guys clear. This is the summary of the things that you've learned. So now we're gonna be looking at the charts. Okay. Okay. So what can you see from this chart? Haha. What can you see from this chart? Like for example, the chart that you have right now is TSR 20 futures at daily time frame. Okay. So can you see? Can you see the higher highs and higher low that I mentioned? Okay, this is the higher high, right? Okay, let me high. Okay, this is where the high highs. This is where the high high. This is where the high high are. And then you have the higher lows. Agreed? Higher lows, and then this is where the high highs. Okay. So these are the markings that you want to be looking at when you study the charts for TSR 20. Okay, so there you are. You can see the resistance and support. Okay, this is the resistance, right? Correct. Okay, this is the resistance, and this is the support. This is the support. Agreed? It's seen by many traders. Okay, it's being seen by many traders. It's obvious, and everyone can see where the resistance and support are being situated at on the chart. Okay, so now let's look at this one. Like for example, resistance, and can you see where the arrow is? It shows that one bullish candlestick. Where do you think the price is gonna go? Is it gonna go down or is it gonna go up? Let's I mean, you cannot exactly predict where the price is gonna go, right? I mean, you cannot predict 100% because if there is a trading strategy that can predict 100%, there's gonna be called a holy grail, and the one that's making all the one that's making that holy grail trading strategy is gonna be so rich. But because this is real world, and such thing, it doesn't happen. It doesn't exist, in fact. Okay, so there's no 100% in predicting where chart is going to go, because the next second, in fact, the price is probably gonna be falling down like waterfall. The next second, 100 200 ticks down. Okay, but the percentage of the price going up is higher than going down. Why? Because the buyers are stronger than sellers. Okay, that's what, because that's what we learn in the about price behavior when it breaks the resistance, right? Okay, so of course I wouldn't deny the fact that it can go down, but the percentage of the price to go up is much higher, and we want to be trading following the trend. We don't want to fight the trend. Okay, so for example, with that one singular candlestick already telling us that the market is going up, and yes, it did. It went up to 198. Okay, and then you can see here that this one candlestick, what do you think? Where do you think the market direction is? Is it going to go down now, or is it going to go up? Down or up? Has the market reversed yet? I would say no, okay, because there's no reverse. It hasn't break the previous low yet, right? Okay, it hasn't break the previous low, which is here, or you can say it's here. Okay. So next one. Okay. So this was the candlestick that we were looking at, and look how it reacts from the previous resistance. And from the candlestick itself, you can see how the buyers are pushing the price back. Okay. And then boom, it did 323 points down. Okay, and then when it reaches the previous resistance, okay, remember when it breaks the resistance, this becomes the support. Okay, when it reaches the support, what does it tell you about a price reaching a support? Buyers stronger than seller. Buyer will push the price higher. Okay, do you expect it to go up or to go down? Of course, there is a percentage that the price can go down, but with that candlestick, okay, with that kind of candlestick, I would say it's gonna go. There is a possibility of it to rebound, okay, and it did, okay, and it did. This is where it rebound the price that we're looking at just now, and then it rebounded 225 ticks all the way from there, okay, okay. So now from there, okay, you can see this is where it was from the previous slide here, okay. It broke out from its resistance here, reach all the way to this part, okay, and then it tried to break the support, but then there's a very strong bullish candlestick push the price back, and then it went up. Okay, from this chart, can you figure out what the price actions are? Where do you think the direction is? Is it going down or going up? No clues yet, right? It's probably sideways. Okay, let's look at the next slide. Okay, is it valid for me to draw a head and shoulder pattern here? You can see the left shoulder, you can see the head, and you can see the right shoulder. All right. So if it breaks the trend line, you will expect the price to go down. Correct? Price behavior, it repeats. Market repeats itself. Okay. So there you have it. You have this bearish candlestick, meaning if it's red, it's seller stronger than buyer. If seller is stronger than buyer, where do you think price is gonna go? Is it possible for the price to rebound? Possible, because that was where the support is, right? Okay. Now, do you think it's going down or up? Has the support broken yet? Do you think the direction is going to go down? Possibly. Okay, possibly. It's possible because there is a head and shoulder chart pattern showing that there is a reversal happening. The candlesticks are showing that the sellers are dominating at that point, and it has already broken the support as well as the market structure, right? Okay, next. And yes, it did. Okay, 348 ticks down. Okay, so let's look at time frame 30 minutes. Can you see anything here? Where the market direction is? Is it trending or sideways? I would say sideways, right? Sideways. No direction, no higher high, no higher lows. Okay. Now, still nothing. Okay. I've already drawn you where the support and resistance are, but I would say that there is no clear market direction yet. Now, can you see the market direction? What is this? This is the higher high and higher low, right? Previous resistance now acting as a support. And this is where the higher high. Okay, next. Now, can you see here this bearish candlestick? It reaches the previous resistance. Is it going to rebound or not? It's possible for it to rebound, but it's also possible for it to go down. But naturally, you would expect the percentage for it to rebound is higher. Okay. Okay, still nothing yet. It's still playing on the resistance, the previous support, the previous resistance, now acting as a support, and it rebounds. Okay, rebounds. This is in last December. Okay, it went up and then it went down again. Okay, and now it reaches the same resistance, same support, not the previous resistance, but now the support. Up or down, it went up. Okay, and the direction is being told exactly just as what we learned about the price action. Okay, about the support and resistance, market structure, okay, chart patterns, trend lines, candlesticks, okay, and the whole part of this going up. Does that mean? I mean, let's say if you're already late in the middle of the trend, can you still ride the trend? Of course, yes. You're gonna be applying the same thing, okay? The higher high and higher low, okay? Can you see where the support and resistance are? Okay, this is where the resistance now becoming the support. So you enter at the support, okay? Breaks the resistance, now becomes the support. Breaks the resistance, now becomes the support. So what you see in the dailies is also happening at the smaller time frame, okay? The dailies, and this is the 30 minutes. It's the same thing across all time frames, okay? So current daily TSR 20 rubber futures contract, where the price is, where the price is gonna go. Is it gonna go up or is it gonna go down? Okay, at this point, I'm still bullish, and if it breaks the 186, okay, the previous resistance, okay, I would expect the price to go down or up. Percentage for it to go up is higher, okay. Okay, so last few slides. Okay, we're gonna be closing up. I will finish my session now. Okay, before you go into the Q&A. So when you want to analyze the market direction for rubber futures, the major time frame, you want to be looking at the dailies and the weeklies. Okay, daily time frame and weekly time frame. For minor time frame, 30 minutes and hourly. Okay, and yeah, 30 minutes and hourly. Okay, H1. So identify the direction at the dailies, and then you find the best entry levels at the smaller time frame, which is at the 30 minutes and hourly. Okay, and then a very quick slide on how you want to decide and plan your trade. Okay, so you analyze the chart and then decide whether the direction is bullish or bearish or sideways. Okay, because if the major time frame is bullish, you want to be following the direction. Entry, whether you want to be trading pullbacks or breakouts, and what are the confirmations for the setup. For example, you're entering at the support, you're entering at the higher lows, you're entering at the trend lines, for example, the necklines in chart patterns. And then the third one is your risk management, your stop losses, and your target price, your rewards. Okay, you don't want to be targeting all the time for the moon. You want to know where you want to exit. Okay, you want to know how to go in, and you want to know how to go out itself, as well as you want to know, most importantly, what defines you as a trader is knowing when to go out. Okay, and a lot of traders doesn't know how to go out, and then they ended up blowing their whole account in one day, for example. And I've seen a lot of cases where clients are blowing their accounts in very short time frame just because they don't know how to go out. They don't know where's the best point for them to go out. Okay, I mean, everyone can entry, okay, but not everyone can exit. All right. And then the last thing is, when you've already done all your market or your trading plans and trading strategies, let the market do the job, and let the probabilities to help you achieving the winning rates that you are looking at, as well as for you to survive the market. Okay, that's all for me. Thank you so much. I think I've probably gone a bit overboard, 2 minutes beyond 9:30. But that concludes my session for tonight. Okay, so I'm gonna pass back to our host, Mr. Darren, for us to go into the Q&As.
Okay, wow, this is a very insightful knowledge shared by Dr. Arif just now. And yep, thank you, Dr. Arif, for the sharing. And yep, let me check the chat box of some Q&A. So There's one client asking about, compared to FCPO, is it rubber easier to trade? Because SCPO have a lot of whiplash.
Okay, so I mean, if you compare to rubber futures, I mean, if you compare the liquidity and the volume, of course, it's going to be different because, I mean, when you look at the candlestick itself, right, it's different. I mean, when you look at rubber futures at 30 minutes, 30 minutes in FCPO is different, and the 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 candlesticks are much more defined, and you can see the price action better in FCPO, okay, because there's a lot of volume and liquidity. But when you look at rubber futures, and you have to be looking at the slightly higher time frame, okay, you're going to be looking at the M30 so that you can see the candlesticks better, so that you can see the price actions better. I'm not saying that there is no price action in TSR 20 rubber futures. There are price actions that you can see, same as what you see in FCPO, you can see in rubber futures as well, okay? And you can, and from the charts that you see, you can figure out where the market direction is, what the market is doing, and where is it going. So of course there are some differences, but I would say TSR 20 rubber futures is still tradable. Okay, it's still tradable, but you're just gonna have to look at a higher time frame lah, from M30 to H1 to 4 hourlies to dailies. And then what's great about rubber futures is that the margin is much more lower compared to FCPO. FCPO is now it's 6,000 per lot, right? Rubber futures is 2,700 plus per lot. So if you're trading at a higher time frame, you will have the convenience to hold your position. Okay, so I mean that's compared to FCPO. All right.
Okay, so that's the first question. Due to the time constraint, I think I will pick another two questions only. So there's a second question is asking about, so if rubber is suitable for swing trading, does it mean that we don't have a clear positions by the end of the day?
Not necessarily. I mean, if you're talking about, I mean, of course, as I've shown you just now, the swing and position trading is much better as compared to the scalping or intraday trading in rubber futures. Because why? Because when you go down lower than 30 minutes time frame, the price, the candlesticks are a bit patchy. Okay, it's a bit patchy, and then there's a lot of I mean, the candlesticks are not well formed when you compare to the other contracts, like for example, like crude oils or FCPO. But uh, as I mentioned, despite the patchy candlesticks, you can still see the support and resistance. You can see where the market structure is. You can see where the trend lines is, the chart patterns, where the key levels and key zones where the buyers and sellers are reacting. So the price action is still there in the smaller time frames. So I wouldn't say you cannot exactly scalp or do intraday trading in rubber futures. You still can. Just that you're gonna be just that the chart is not gonna be as nice. That's all.
Okay, so there will be a last questions for today. So which is, does weather or season will affect the movement of the price of rubber?
Oh yes, definitely. I mean, just I mentioned earlier, right? On that one slide where I talk about supply and demand, and you can see. I hope you still remember my slide where I show the production is mainly concentrated in Southeast Asia. You have the Thailand and Indonesia dominating the global rubber production. Okay, so if any weather changes happening in this region, for example, you see recently have El Nino, La Nina, floods, okay? Probably we're talking about typhoons and hurricanes affecting these areas. It's gonna disrupt the supply, the productions, okay? And if the production is affected, and you expect that it's gonna be affecting negatively, what's gonna happen to the price? If the supply goes down, the price will go up. Okay. And to extend that question, on the demand side, you're going to be looking at China. Okay. How the automotive industry is going at in China, and how active the automotive industry is in China, how the demands are in China, how the demands are in all the other leading consumers in rubber industry. So these are all the factors that's going to be affecting the price, and it's very simple to understand actually. And you know, when you see all the news, you have all the Xiaomi and BYD fighting with each other, trying to make the best cars. You know, the automotive industry is active, and you know they're gonna be needing rubbers. You're gonna be rubbers to make their tires. Okay, so that's where the demands are, and if the demands are active, the price is gonna be pushed up. All right.
Okay, so yeah, thank you so much, Dr. Arif, for answering those questions. And yep, I know a lot of you have some questions that if let's say if you really want to get more information, yes, you can always find our affiliate capital, our respective dealers to assist you for this matter. So don't worry, we are always here to assist you. All right. So once again, we thank you, that Dr. Arif, for just now for the sharing.
Thank you so much.
Okay. Yes, thank you. So before the end, I just want to show something about my PPT slides. It's about if you want to connect with us, yes, you may please follow our Philip Capital social media, for example, Facebook, YouTube, LinkedIn, and TikTok as well. So yeah, today's session we also will upload in our YouTube channel. So you may subscribe our YouTube channel after that. And let's say if you want to scan a QR code, you can also follow our TikTok channels by scanning for these QR codes. And we will always update and request for our seminar and webinars, and also with some technical analysis and some hot and trending news. And also, you can also join our Telegram channels, as we are always sharing the latest news on the markets. Like for example, Philip Capital's. There's a two channel. It's called Philip Capital Stocks. Another one is Philip Capital Futures and CFD. So you can take a screenshot and you can join the channel and get some latest news from our site. All right. Without further ado, so let's say if you want to contact with us, so you may take a screenshot for this slide. So let's say if you're near to this area, you can always contact to these respective numbers or send an email, or you can just walk into our branches, then we can always assist you on time. Let's say if you have any inquiry. And also you can always call in this HQ leading desk, as let's say if you have any problem at midnight. So they will have always be ready to assist you. So once again, yep, thank you everyone for joining today's sessions, and yep, good night.
All right. Thank you, everyone, and good night.